Ever wondered how the Vanguard S&P 500 Growth ETF compares to the Vanguard S&P 500 ETF in terms of performance? Before we do the deep dive, remember to subscribe for more content like this. I can produce more videos for you on your favorite ETFs and index funds. Now let's dive right into VOO vs VUG. When we look at the compound annual growth rate, or CAGR, a key metric that provides a smoothed annual rate of return, we can see some interesting differences. The Vanguard S&P 500 Growth ETF boasts a CAGR of 14.13%. That's a pretty impressive figure. Now let's compare that to the Vanguard S&P 500 ETF. This benchmark fund has a CAGR of 12.98%. While that's still a solid return, it's a bit lower than its growth-oriented counterpart. What does this mean? Simply put, for the time period we're considering, the Vanguard S&P 500 Growth ETF has delivered higher returns. So if we're talking about returns, the Vanguard S&P 500 Growth ETF seems to be leading the race. Now let's delve into the volatility and drawdown of these ETFs. To begin with, volatility refers to the degree of variation in an investment's trading price over time. A higher volatility indicates a greater price range, making the investment riskier. Conversely, lower volatility represents less risk as the price does not fluctuate significantly. In our case, the Vanguard S&P 500 Growth ETF exhibits a higher standard deviation of 33.32%, indicating it has higher volatility compared to the Vanguard S&P 500 ETF, which has a standard deviation of 32.39%. This suggests that the Growth ETF could see more dramatic price swings, leading to potentially increased risk for investors. Now, on to drawdown. Simply put, drawdown is the peak-to-trough decline during a specific recorded period of an investment. In other words, it's the measure of an investment's downside risk, or how much you stand to lose when things go south. The S&P 500 Growth ETF has experienced a maximum drawdown of negative 29.48%. This means that the ETF, at its worst, lost nearly a third of its value from its peak. In comparison, the S&P 500 ETF's maximum drawdown is negative 18.19%, indicating a smaller potential loss from peak to bottom. So what does this all mean? Well, while the Growth ETF may have produced higher returns, it also comes with a higher potential risk. The increased volatility and drawdown could mean larger price swings and potentially larger losses. Investors must weigh these factors against their risk tolerance and investment goals. In essence, the potential for higher returns with the Growth ETF may be appealing to some, but others may prefer the relative stability of the S&P 500 ETF. Therefore, while the S&P 500 Growth ETF may have higher returns, it also comes with potentially higher risk. But what about the risk-adjusted returns? Let's take a look. The Sharpe and Sortino ratios offer valuable insights into this aspect. For the uninitiated, these ratios measure the performance of an investment compared to a risk-free asset after adjusting for its risk. The S&P 500 Growth ETF has a Sharpe ratio of 0.88 and a Sortino ratio of 1.42. On the other hand, the S&P 500 ETF has a Sharpe ratio of 0.85 and a Sortino ratio of 1.35. What do these numbers mean? Well, they suggest that, on a risk-adjusted basis, the Growth ETF may offer slightly better returns. It's a bit like getting a tad more bang for your buck. However, it's important to remember that higher returns often come with higher risk. This suggests that the S&P 500 Growth ETF may still be a more appealing choice for some investors, despite the higher risk. Finally, let's talk about expense ratios, dividend yields, and the impact of dollar-cost averaging. The Vanguard S&P 500 ETF sports an impressively low expense ratio of 0.03%, along with a dividend yield of 1.38%. On the other side of the coin, the Vanguard S&P 500 Growth ETF carries a slightly higher expense ratio of 0.1%, with a dividend yield of 1.09%. These differing expense ratios and dividend yields reflect the respective investment strategies and holdings of each ETF. Now onto dollar cost averaging. If this investment approach was used, consistently investing $2,000 in the Vanguard S&P 500 Growth ETF every month over its counterpart could have resulted in differential gain of around $72,000. Based on the backtest data and article linked below, this highlights the importance of choosing an investment vehicle that aligns with your financial objectives and risk tolerance. In the end, the choice between the Vanguard S&P 500 Growth ETF and the Vanguard S&P 500 ETF depends on your financial goals and risk preferences. After all, this is not financial advice, so consulting a financial advisor could be beneficial. So choose wisely. Please like and subscribe for more reports and deep dives, like this one.